Thank you very much, Ashwin, for joining us here on ET Now. Now, luxury housing trend, a boom in premium housing was a standout trend last year. And looking at, the news flow this year, I mean, DLF really making another record as far as the latest purchase is concerned in the space of luxury housing. This year also seems to go rather big on luxury. And you have recently released a report on luxury housing as well. What are the key trends? And this year, 2024, do you think it's going to be a year dominated by luxury housing and premiumization again?
Sure. So thank you for having me on ET Now. Yes, our survey does indicate that the home buyers are back and back with a bang. If we look at some very telling findings, one, 71% of our people who've taken high net worth individual who've taken the survey are of the belief that they're looking to buy in 2024-25 financial year. Two, another very telling aspect is that we've seen the return of the investor. And why I say that is because capital appreciation, which was not even present as a key attribute to purchase real estate last year, has now become one of the leading attributes to purchase luxury real estate. This, to our mind, will lend more steam to the bullishness in the luxury real estate market, just like over the last 2 odd years, luxury quotient and end use have lent to the marketplace.
Right, so very interesting trends, of course, coming out of the report. You say that capital appreciation, more than an upgrade in lifestyle, is coming out to be the primary motivator for the luxury real estate market. But some other interesting trends as well. We'd like to know from you in terms of purchase habits or trends across income groups or age groups. What are some of the findings in those sections?
Sure. So one small correction. When I say capital appreciation is telling attribute today for the purchase of luxury real estate, it does not mean that end use or luxury quotient is out of the window. I would say that that is a given, that the luxury quotient, the look and feel, amenities, facilities, services, etc. are there, but people, investors, buyers are looking at capital appreciation as well. As far as the overall buyer sentiment is concerned, buyers are looking to buy, continue to buy in holiday homes. So much so, our survey of holiday homes has indicated that on one hand, we've got Goa, where 35% of the buyers have wanted to buy in Goa, and the balance 65% are looking at, all over India. So Goa stands out as a key destination for holiday homes. Second, we've seen a preference for farmhouses as such, and specifically in Delhi NCR and some places of Mumbai in the outskirts of Alibag or Karjat, etc.
Right.
And the propensity of people to live in open spaces, cleaner air, having their own ecosystem, and of course, a little away from the hustle and bustle
Right.
of the city. That has also become a major finding in our survey, and 20% of our buyers have indicated a preference for such living in farmhouses. This is also reflected in the price rise of both these segments, be it holiday homes, where in Goa, like, prices have gone up by about almost 70-80% over the last 18 months.
Right.
And likewise in farmhouses as well in Delhi NCR, where the prices have gone up to similar extent.
Right, right. So you speak about, areas that have gained traction, sectors that have gained traction. But if I were to ask you about further segments of opportunity or pockets of opportunity, where are these opportunities really coming from as far as luxury real estate is concerned and the growth in this sector is concerned?
Okay, that's a good question. As far as further opportunities are concerned that are coming up in this segment, we feel that holiday homes will continue to be an opportunity, because it serves not one but many objectives. It helps you to achieve a objective of owning a holiday home, a private holiday home which can be used by family. It allows you to get a capital appreciation element, and also allows you to get some rental element owing to a lot of these companies like Lohono, etc., which are taking care of these homes and putting on short rentals, etc. So that remains one segment. The other segment we feel is that markets like Delhi, particularly where prices have moved up more like 20 to 30%, will likely to show some more appreciation.
Okay.
Vis-a-vis, for example, Gurgaon, where prices have moved up by as much as 70-80%, be it in high-end condos like Camellias, Magnolias, or for that matter, land prices as well in Gurgaon. So we feel that uh, there will be some sort of equalization there. There is also some news of the Gurgaon circle rates going to be increasing substantially, and that to our mind could possibly weigh on the sentiment as far as Gurgaon is concerned in a not so positive manner. Uh, Vis-a-vis Delhi looking to will be looking up. The another factor that I would suggest is to look at developments which are coming either completed or coming close to completion,
Right.
be it in Mumbai, be it in Bangalore, Pune, etc., where because we've traditionally seen that developments which are just about getting completed are they see a price rise because they get handed over and you've got good quality gentry coming in,
Right.
facilities,
Right.
amenities getting used, and the whole place gets lived in. So that is a good area also to look at.
Right, and in fact, you mentioned very interestingly of infrastructure development. Just last week, the MTHL, link road, that highway was inaugurated by the Prime Minister. In fact, tier two towns and cities as well are humongous. Opportunities are providing humongous opportunities for people to really invest in, for investors to really park their money over there. Do you want to weigh in on that as well?
So, honestly, we are not operating in tier 2 cities, but what we hear is there is a lot of buzz around buying properties, plots, etc. in Ayodhya, in and around Gift City. Varanasi is, come back into action. So those are some tier 2 cities where there is investor interest. We would weigh it with a bit of caution because we do feel that real estate, especially luxury residential real estate, should be bought with at least if not a full but a partial quotient of end use.
Okay.
And one should really have that objective. We also in our survey have seen almost 45% of our respondents wanting to consolidate assets, and the fact being that if you are looking to build more assets which are going to add as non-core assets, not significant value in your portfolio, you may then once again end up with a need to consolidate. So I think assets that get bought into the portfolio need to be bought with a proper thought that
Right.
they are going to be core assets or they are going to be purely business assets, and that should be the driving decision factor.
Right. Another very interesting point, Ashwin, you mentioned was about price appreciation last year. According to several research agencies, 10 to 15% was the price appreciation across India's top 7 cities. I want to understand how much room for further price appreciation do you really see, and affordability is then all set to take a hit, or will affordability improve?
So, I think as far as price appreciation is concerned, there will always be pockets where we will see price appreciation. Some pockets will show higher appreciation and some may show lower appreciation, but I do feel that there is room for a similar 10 to 15% kind of price appreciation, looking at the way Indian economy is going. As far as, sorry, what was the second part?
Affordability.
Okay, as far as the affordability is concerned, I think affordability in the ultra high net worth segment is, as we see, is only increasing.
Okay.
People are today wanting to buy an apartment in a Camellia's wherein you're getting just about a super built-up area of 10,800 square foot for 100 crores, which is actually as expensive or slightly more expensive than buying per square foot in Lutyens, Delhi.
Right, right.
So,
And
and the reason for that is primarily because of the length and breadth of services, amenities, facilities, gentry, clean air, so to say, a golf course, all of that is coming with it. So affordability in this segment is only looking to go up. Recently our Dubai counterparts, they concluded a sale of penthouse in Dubai for 100 million US dollars, which was just about 24,000 square foot.
right, right.
Why? Because it had everything thrown in.
And one very important point to also mention from the report, you've mentioned that startups are really sort of adding to the new class of people who are really buying these ultra luxury homes or luxury homes. And that's set to boom because you have digital actually supporting all of the purchase cycles.
I think that's a very telling trend. Startup promoters are looking to buy. They are quick decision makers. They believe in, there's a lot of professionalism dealing with them. They are looking at either high-end condos. Some of them have got personal preferences to even look at the homes in Delhi, especially Lutyens, Delhi. So that is happening. And moreover, their way of searching for homes, which is using the digital media, I think that is a very important trend that is emerging. Erstwhile, the old rich used to only talk to their family brokers who've been with them for the last 20, 30, 40 years and used to spread the word. But now looking at things digitally, and that's where maybe Sotheby scores a point, because we have a very well combed out marketing platform, and we believe in the digital splash of lifestyle to reach to the who's who as buyers.
Okay, final few questions before we let you go. I want to also understand your outlook for this year 2024, and I'd also want to know the kind of appreciation that you will see. You said 12 to 15%, further 12 to 15%. So what then is the outlook that you have for the sector for 2024, particularly for the luxury real estate sector?
So there are two parts to the outlook. One is with regard to what kind of industry trends we see in the luxury segment, which, as I mentioned to you, we feel that there is steam left, and there could be a 10 to 15% price rise that we could see in this particular segment, owing to a politically sound center, owing to interest rates already peaking out and can only go one way. It's just a matter of time whether it is 3 months or 12 months, and owing to the overall GDP growth. So, but that being said, if I look at internally for us, we are definitely would peg our overall sales volume growth at a higher number, which would be more like about 30% or so.
Okay.
Why? Because we feel that we are in a marketplace where there is no organized competition.
Okay.
And the way we are the brand legacy, the network, the Sotheby's network, and the marketing platform that we have really sets us apart as a real estate advisor in the luxury residential space.
Right. And also to speak of the upcoming budget, what are really some of the expectations, something on the wish list that you want to, of course, tell the FM?
So I think the FM has always been very proactive and forthcoming as far as taking care of this sector. But I think interest rates remain as one aspect. Mortgage rates, if they would go down to where they were, I think that can really add a further fillip to the demand in this sector, not just for the luxury segment, but across the segment. It will give the market the rally, the body to it. Second of which, I think if at all there could be something from a luxury standpoint, one would take the liberty of sharing that the capital gain benefit, which was curtailed to 10 crore in the last budget, has made an impact, and that as a segment has resulted in some bit of slowdown for capital gain money coming into this segment. So if at all, like they say, if one should wish for the sky and at least land at the treetop.
Right.
So those are a few things that possibly one could look at.
Huh.
Industry status is something that the industry has always been asking for, and it's really
Let's
dependent
expect
on.
for the best then. One final question before we let you go. Ashwin, you mentioned about interest rates. Of course, that's one risk playing out in the markets globally. Fed, of course, had maintained a very cautious commentary as far as interest rates are concerned. That's the commentary coming in from Davos as well. But your report said that, domestic investors or people who have invested in these houses, they remain pretty bullish. How do you really explain that, and what could be the possible risks that you're looking at, especially in this sector?
Okay, so I'll tell you why we say that. Domestic investors, at least in the ultra high net worth category or high net worth category for these luxury residential homes, we have not seen them to resort to mortgages as a source of funding.
Okay.
And the reason for that is buying a home is an off-balance sheet item, and we like to always advise accordingly that this is an off-balance sheet item and should not be correlated with, for that matter, returns or mortgage rates. Yes, if rates do come down, it always becomes a added advantage for the high net worth, because as far for them, pulling out money from one bag and put one segment and putting it another is really the name of the game.
Right.
So but that being said, as far as the risks are concerned, I think in the resale segment, there is per se it's all end use driven, because you're buying something which is built up and it is for your end use, for your family or family getting extended, etc. The only risk that one possibly sees is, as we know, markets are known to be slightly insane at both ends, just like we saw in 2014 when valuations were crying their lungs out in terms of per square foot prices, but there was no investor which was there, and up until recently we now see the investor. But now that the investor has come back, it has come back with a bang, a super bang.
Right.
So it should not get overdone, because if it does, then it creates that bit of froth in the market. So we as advisors always propose investments in luxury residential real estate more from a end use perspective rather than a return perspective.
But you're clearly saying that the bull rally is going to continue in the luxury real estate segment. On that note, thank you very much, Ashwin, for joining us.
Thank you for having me. Really appreciate your time.
Thank you.